Roundtable discussion where we talk about current market conditions and answer any questions you might have. Ian, thank you. You might have. If this is the first time, if this is your first time, please type in yes. Always want to welcome new subscribers. This is disclosures. Please visit optionsclearing.com link if you haven't seen this screenshot, and to understand the risk and suitability associated with trading stock or options. You can always pause the screen to read the remaining of the disclosures. All right, trading psychology is important. Before we jump into trading psychology, let's just review the market conditions in general and kind of review our view on the market till the end of the year. So if you look at the yield, right after, well, last week it started with the escalation in tariffs, right? China imposing, you know, not tariffs, but making it harder to get licenses for the rare earth metal. Market sold off, right? And continues to sell off, at least in the yield world, where it continued to break down below 4%. And after Trump, on Monday, when Trump said that, you know, don't worry about, we're going to find an agreement with China, interest rates did not react, but now market is more, I guess, oversold, or because of the option expiration, but at least after he reiterated that, you know, they will find a solution with China, at least yield is back above 4%, which is bullish for the bulls, right? I mean, we'll see if it's a false breakout or not. It's too early to tell, but at least initial reaction, breakdown, and then after the de-escalation in tariffs, we're back to 4%. So interest rates are important. Bitcoin, right? Bitcoin also broke below September, you know, October, August, July lows, basically on its way to retest May lows, right? May and June lows. So Bitcoin is also not reacting to Trump tweets and broke down. Futures reacted positively, right? We retested it before the tweet. We retested the lows from last Friday, and then now we actually turning positive, right? In the market, positive, but no new signal, right? So we're talking about in live trading room, if you were there, about ABC pattern, right? Right, that we have strong A, B, we're trading in C, right? And the question is there continuation? That will depend on the news, right? You know, in terms of wave A, wave B, and then wave C. We had a retest, you know, is it over, or is there, it depends on the news, right? We had some skeletons in the closet or cockroaches in the closet. I'm paraphrasing Jamie Dimon, right? And scare yesterday with Zion announcing write-offs in bad credit loans in regional banks. Today, regional banks actually had positive reaction, so definitely you can see maybe slightly exaggerated reaction, again, due to expiration and just weak positioning, but regional banks had a sharp sell-off, and stabilizing, but still below 50, below 20, very sharp breakdown, similar to what we've seen in 22, right? '23. We haven't had these big volumes since February of 23, and then there was another one, I think. Yeah, 23. So there was, I think, here somewhere in April, right? June or April. But anyway, we haven't had these since the regional banks back in the 23, in terms of magnitude of the move, right? In terms of magnitude of the move. And the volume, right? Pretty sharp volume. We haven't had this volume since that scare back in 23. Okay. So that's the market. In terms of stock forecast toolbox, if you look at the stock forecast toolbox, support 656, this is this pre-market session low, this week low, last week low, and close to all-time highs, or this week low 667, neutral trend. So basically saying choppy market, we're trading in the range. We do have an expiration today, but don't expect unless we have some new information in the market to break through this range, right? And we have a lot of uncertainty with government shutdown. The longer it takes, the greater level of uncertainty. GDP is going to continue to contract for every week the government shutdown. Then it's still unclear whether there will be 100% tariff on November 1st on China as a retaliatory measure. But on the other hand, earnings season is better than expected. Banks are doing well. Even regional banks today show that it's doesn't look like a systemic issue, just kind of a couple of bad loan write-offs. And if you zoom out to 6 months prediction based on our model, Gene, welcome back. Thank you. Let me know if this is your first time. Well, if it's first time, I can review some of the things we already covered. But if you zoom out based on our model 6 months, it says 676 again as the overhead resistance, but we could be as low as 624, right? 5–10% pullback. I would not be surprised based on the model. Even if we retest 600 level. And we talked about this in the live trading room, right? In terms of positioning, this is the AI model built by, Tradespoon that shows you where the market is going. But if you look at the SPX itself, where people position, obviously we have an expiration today. But let me look. Select all. Show all. So the gamma flip is 665 right now, right? We're trading right at below that level. Overhead resistance is 6,700. Highest level concentration of puts and calls are at 6,700. But you can see people are building very large position at 6,000, right? So just like the model says, you should not be surprised if you do see 6,000, right, in the next couple of weeks, maybe a couple of months. And overhead resistance is 7,000. Next level of support is 6,500. So very large positioning at 6,500 strike. So if the bulls break through the 65, bears cannot keep the 6,500 on SPX, which is basically this level, right? Then the pullback could accelerate, right? And that's kind of where you could see next level, maybe 6,400, 6,250, as low as 6,000. So, but that will depend on the news, right? If you have a good, right now we're kind of, for the past 5 weeks, we're just trading in the range. So based on the estimated move analysis, right, I usually like to, it's the 50 strikes. All right, where can we expect by the end of the year, right? Model basically says 6,700 is one level of large overhead resistance. Select. So most position actually, if you look at the 60, at the gamma, right? So October expires, so most of the gamma is in October, but then we do have December already start building, and not a lot of position in November. So most of the position is in December. So if we select November, December, and November monthly expiration. All right, so one standard deviation right now, basically into the end of the year. And into the end of the year, we are trading 7,000, right? We're kind of revisiting 7,000. So one scenario, we're at 7,000, right? That's scenario number one, right? We're going higher. The other scenario, right? We unable to break 6,700, right? Maybe marginal breakout. So we're trading in this range, right? 6,400, right? So that's scenario number two. And trading is about probability of distribution of probability of possible outcomes, right? So scenario two, we're trading somewhere between 6,400 and 6,700. And then scenario number three, we're kind of that positioning, we 10% sell off at 6,000. So those are the three scenarios. Why is this important to go through this exercise? Because in trading, risk management is very important, right? You don't know what the next tweet is going to be. Is it going to be positive or negative? Market will rally or sell off. So it's important to have the right position size, right? The most important skill in trading is to determine what's the appropriate for you number of positions and position size, and be able to predict how you will react, right? If the market is at 6,700 at the end of the year, or if the market is at 6,000 end of the year, right? Because both outcomes are possible, right? So scenario number one, we're at 7,000. Right, scenario number two, we're trading in a range till the end of the year, somewhere between 6,700 and 6,400. And scenario number three, we're revisiting 6,000 level, right? We break below 6,400, maybe 6,000, maybe 6,300, but two standard deviation move, right? So most of the time, was based on distribution of outcomes, we trade in one standard deviation, right? So between now and end of the year, 7,000 to 6,400. Anything above that or below that, that's more than one standard deviation, happens rarely, but it can happen, right? So how many of you say scenario number one, we're going to close the end of the year somewhere between 6,800 and 7,000, right? That's scenario number one. Scenario number two, no, we're trading somewhere between 6,700, 6,400, right? Still not clear when the government is going to be shut down or reopen, right? Not clear what the inflation data now looks like, or unemployment data, and probability that we're going to reach an agreement with China by November 1st. Maybe it's not as great as Trump make it look like. So then scenario number two and scenario number three, maybe we have the regional bank issues with the bad loans. Maybe it's not just one-off. Maybe there's more. Maybe there's dislocation in repo facility, and the bond market is selling off. So then you have that 10% pullback. All right, how many of you say one? We're going to close the year close to 7,000. How many of you say no, Vlad? Still a lot of uncertainty. They're not going to get cleared in the next few weeks. These negotiations take time, whether it's a government shutdown or reaching an agreement with China. So we're at 2, and 3, some liquidity systemic issues in the market, and we're down 10%. BJ, Gene, Ian, Mark, Fred, what do you guys think? BJ, 1. Okay. Gene, Ian. I'm going to stick with 1 as well, right? I think short term, there's definitely market volatility. We could have, 5-6% pullback. I think that's, right now my portfolio is overall bearish, actually. But I think, just like Trump says, maybe we're not going to reach an agreement on November 1st, and maybe we'll impose 100%, but then a week or 2 weeks later, I think November, December is going to be strong from seasonality point of view, and, market will recover. So for now, I'm playing defensive, right? I'm actually, as long as we're between 6,400 and 6,700, I'm a seller into the rallies, right? I'm a seller. Every time we reach 6,700 because of the positioning, I would be a seller, right? Every time we get to 6,500, even 6,600, these are, I think, good buy zones. Right? And then you look for a breakdown, right? If we break above 6,700, I would start adding. I would start getting more bullish. Obviously, if we break below 6,400, I would be more bearish. And then prepare for all 3 outcomes, right? The idea is to be prepared for all 3 outcomes. Gene, thank you. All right, so this is important exercise. I encourage you to do this, whether you're looking at end of the year or end of today or end of next Friday. You can look at the options data, right? All right, you can pick expiration that you want to find this analysis. You can go to Stock Forecast Toolbox and look at 6 months, 1 day, 10 days, 1 hour predictions to kind of look at the support and resistance levels and look at the trend, right? Look at the trend. We also have on Tradespoon active traders. So we have different models that are running, right? And basically tell you which stocks model things can outperform the market. So today, yesterday, you can trade stocks, you can trade options. Today was Duke Energy. So utilities continue to grind higher and outperform in the market. Caterpillar continues to grind higher, outperform in the market. So every day market model runs and gives you bullish, bearish ideas, right? BBT. Right? It thinks, some of the regional banks are still under pressure, Honeywell. So it gives you a combination of both bullish and bearish ideas. right? And you can trade either stocks or you can trade options, right? They used to do dollar cost average, right? Some of the general suggestions are use dollar cost average, break your trades into two parts, right? If you're trading options or stocks. Here we're looking for 1% move, right? $127 stock. If you buy a $1.70 option, you exit $3. You capture 1% move in underlying stock, right? You can trade either monthly options or weekly options if they're available. It could be 1 week out, 2 weeks out. It just depends on your style. But these are signals and suggestions, but you have to manage your portfolio and you have to manage these signals, right? General suggestion again, 4 active positions at a time with maximum loss of 2.5% of account value per position. Right? And these signals get published every single day, right? We also have weekly trader, gets published every Sunday. So weekly trader, monthly trader, longer dated models, different models. They're train and learn bigger data sets, just so you can have a longer term view. And same thing, you would get, on Monday, you would get, Consolidated Edison, is an short-term uptrend. COG is in short-term uptrend. So it gives you kind of a longer dated ideas specific for the current market conditions. You can see defensive posture, utilities and consumer staples. So those are the signals that you can trade. If you want to see what I trade and what Keith trading, we have live trading room, right? Elite Circle. So if you go to Elite Circle, you can actually see the trades that I'm doing, right? So this week I've been trading spiders, right? I bought the spiders spread for, bought 640 put, right? Sorry. So I bought the 640 trade, sold 620 put for $3, then bought back the 620 put for $3, then sold it again for $6. So here I'm looking for support and resistance levels and taking advantage of market volatility where, at this point, the spread basically is free. And if the market doesn't hold, if the spiders doesn't hold 50-day moving average, then potential profit $20. So these are the type of option trades that you can expect, usually on daily basis. Some of them are earnings trades. So United Airlines was the earnings trades today. It sold, iron condors, sold call spread, sold put spread, collected 19 cents. So I'm risking 81 cents, 19 cents maximum profit, 81 cents maximum loss. So risk versus reward, the return on risk taken is about 25%, right? And these are short term, where I hold a position for 1 or 2 days. What else this week? Bank of America, I had a Bank of America position, closed Bank of America trade. And also trading, stocks. A lot of people ask, well, I'm not an option trader. This is not for me. No, I trade both options and stocks. Obviously, signals, options are derivatives of stocks. You can, once you have a bullish signals, you can buy stock, you can buy options, but this is an example where I was buying option, right? Buying Amazon stock, bought it to 22, close to 25, still have half of the position left. So it's a combination of both stock and option trades. Any questions on the services? Right, so active trade, these are signals, these are the tools. I talked about stock forecast toolbox. We have some other research tools like seasonality. You can look at seasonality. All right, usually spiders, 60% correlation, it's kind of relation is breaking down, right? Because usually October is bullish, volatile, but usually you have a drop in September and rally and start of the rally towards the end of April. But we did not have a sell-off in September. It kind of got pushed into October. But November, December, from seasonality point of view, is more bullish. You can look also at probability calculator. Same levels we said. 76% of the time, based on historical volatility, going end of the year, we should be trading between 650 and 671, right? Anything below 650, 640, 630, that's now more than one standard deviation move based on historical volatility. Obviously, you have to adjust for VIX. VIX, this morning was as high as 28, 30, right? So a lot of fear in the market. That's probably why Trump tweeted, just to kind of come, we had a Fed put, now we have a Trump put. but no, this time it worked. Any questions? All right. We have more and more people. BJD, Dylan, welcome. Gene, Ian, Fred, Crystal Financial, J Crystal Financial. Okay. Any questions on some of the services, right? I kind of want to cover general market conditions, right? So for now, my mindset is that the top is set, right? The 6750 is set, and until I see decisive breakout above that level for at least 2 to 3 days above that level and above average volume, I assume we trade in, I have downward bias, right? So, every time we approach in 6700, 6725, I would be a seller. Every time we approach 6550, 6575, you can, reduce your bearish positions, right? Go long. If we do have a break below 6500, I would be more bearish, right? If we break below 6500, Friday's low. So that would be my view on the market. Any questions? So that's research tools. What else? In terms of portfolio that you can follow, again, Elite Circle, combination of stock and option trades, you get SMS message, you get email every time I trade, so you can follow this. There is a live trading room, you can ask questions. It's a great way to learn. If you're new to stock or option trades or even futures, obviously, crypto, all of this, which, we also trade. So we have a morning bell, closing bell. Keith and I, are trading during these sessions. You have the recordings. You can watch the recordings if you don't have time to be live on these sessions. You can look at positions orders real time. This is all synchronized with the real broker dealer account. So these are not hypothetical trades. Have gold and silver jumped away too far? The answer is yes, but market can stay overbought a lot longer, right? So you can see silver. I mean, we had these large above average volume pullback. So I think silver does look like it's a little bit exhaustive and it's consolidating, right? So I would probably not chase silver and gold at these levels, right? Gold less, but silver, you definitely see kind of this gamma squeeze, right? Gamma squeeze. So, if we break below 50 level on silver futures, I would be more cautious. BJ, thank you. But if you're looking for more models or more trading, robo-investors, just stock trading, right? Premium portfolio is only spread trading, depending on your style of trading, what you're looking for. Spread trader, you just get spreads. Shadow trader, you just get all my trades, but you don't get the tools or portfolio. So I encourage you, it's a, we give 30-day free trial. Try Elite Circle. You can sign up for monthly, you can sign up annual, but try it out. It's a 90 days of free education. You can participate live, ask questions, learn. If you are committed to trading, if you're committed financially and time-wise, we do have one-on-one coaching program. I encourage you to click on this link, schedule a meeting with one of our coaches. And it's a free session, right? We can talk about your background. We can create a custom plan for you to trade. Take advantage of that. And if you guys are in Chicago, we're actually gonna have opportunity to meet. We do have an Chicago Mercantile Exchange. So if you're in Chicago and you wanna stop by and meet us in person, sign up. There's a small fee, $50, but we're going to be at CME on November 6th, and you can meet Keith and Keith Ken from CBOE and Keith from Options Hotline, who does and me. So in person, ask questions to me. This is a good opportunity. I'll put this link here, or if you want to take a trip in Chicago and eat pizza and hot dogs, and also meet us. That would be also great. So I'm gonna paste that link and send it to all. All right, that's all I have for today. You guys are awesome. Hopefully I'll see you in Chicago November 6th. If not, in live trading room, today, tomorrow. BJD, Gene, Ian, Jim, Simon, Wolf 47, welcome back. And I see you guys soon. Have a great weekend, and I hope to see everybody soon. Thank you very much. Thank you, Gene D. Thank you. Thank you. Anybody thinking about going to Chicago November 6th? Or anybody's from Chicago? If you're in Chicago, this is definitely a good opportunity. Live here. All right. Oh, live here. Okay. Can go. D, stop by. November 6th, I think we have free breakfast, free lunch, free drinks. Should be a fun event. All right. Thank you very much and have a great day. Okay, will do. Sounds good. Yeah, register. There's a registration here. Get tickets. All right, guys. See you soon. Thank you.